Balance sheet. A balance sheet is a financial snapshot that shows exactly what a company owns and owes at a single moment in time. It's built on a simple equation: assets must equal liabilities plus equity. Unlike the income statement, which tracks performance over a period, the balance sheet gives you a clear, frozen picture of a company's financial position on one specific date, thanks to double entry accounting, where every transaction affects two accounts. The balance sheet is built on three key components. Assets are the resources a company controls, like cash and equipment. Liabilities are its obligations, such as loans, while equity is the remaining value after subtracting liabilities from assets. Notice that assets are ordered by how quickly they can be turned into cash, and liabilities by when they're due. Investors use the balance sheet to check a company's financial health in three key areas. Solvency measures long-term debt safety through a high equity-to-assets ratio, while liquidity looks at short-term bill-paying ability, like a current ratio of 4. Finally, capital structure weighs debt versus equity, and book value provides a valuation floor against the market price. Let's look at a real example for a manufacturer. On the 31st of December 2023, total assets are $180,000 split between cash, inventory, and equipment. Total liabilities are $100,000 and total equity is $80,000. The fundamental equation holds $180,000 equals $100,000 plus $80,000, and from the same statement, we can also calculate a current ratio and see the company's moderate leverage. To use a balance sheet well, compare several years to spot trends in debt or cash, and always cross-reference with the income statement to see if more assets are actually driving more revenue. Remember that book value is not market value. Balance sheets use historical cost, not current price, and be cautious with asset quality, as slow-paying receivables are not as valuable as cash. Finally, don't assume high cash is always good. It could signal poor capital allocation, and always check for off-balance sheet items like operating leases.